This is Tom Aspray with the Viper Report. It's Thursday, April 8th. I'm back in the grid after a, I think, well-deserved trip to the West Coast. The big development so far this month, and there has been one, was the close on April 1st at 4019. That's 4019. The first time we've ever been above the 4,000 level in the S&P. You can see the breakout right in here. And as I mentioned at the time, that I feel is significant for the months ahead. We had a really nice pullback in here where we looked to the long side in the DIA because the Dow Jones Industrials was showing the best relative performance at that stage. But one simple technique, and that I'll discuss in more detail in my Wealth 365 presentation, is that using chart measuring techniques, you can get a pretty good price target. So if you look at this high up here and this low down here, it was a difference of about 200 points. And if you tack that onto the breakout level, you get a target of around 41.80 to 42.20. You can do this on any time schedule. Last week I told traders that the near-term target for the S&P was around 40.80 to 41 based on the S&P futures, and we've made it up there already. We're trading at 40.95. You can see the Stark bands here. I'll be talking more about those in my presentation. You can see down near the lower channel here, a low risk buy, a high risk sell, another one in early March, and we're getting up close. As of Wednesday's close, we were within 2% or so of the weekly Stark band for the S&P. It's really been a split market. Some of the other ones are much further away from it. But that does suggest that, we could see a 1 to 2% pullback before we move even higher. One of our ETF positions that has done very well is in the SMH. That's the VanEck Vector Semiconductor ETF. It gave some very nice signals there towards the end of March. You can see the OBV here broke through this downtrend, and the RS was turning positive here, confirming. We've had a nice run from around 236 something right in here up to 255. We think this 258.59 level will be exceeded with next major targets around 268 to 270 on the upside, as after we established that position, the news broke that there was a chip shortage even for automakers. I'll be showing you some interesting techniques for how to project price lows and price highs. This is a chart of the DIA, the diamond that tracks the Dow Industrials, early September. As we know at the time here, we were really overextended. This last push to the upside, last half of August, we got well above the Stark bands here, had a very sharp setback, right around to 265. Got a rally up here, but the advanced decline number said that, okay, we're due for another pullback here. One question, one might have is, well, okay, if this is a pullback and you conclude that it's a pullback, it's a buying opportunity, where might it go? In my presentation, I'll show you this neat little projecting target. It's based off the initial decline into September, the rebound back into October. Allows you to determine where the pullback should end. And you can see that projection low is for 263.22. We actually hit 261.41 below the daily Stark band for 2 days, oversold and ready to move higher. Of course, that has been the low since then. Of course, I also show you how you can use the pivot levels to help support this analysis. You can see that we got very close to the R1 level in early September, pulled down below the S1 support, rallied up in October, failed below the R1, and then at the October lows and the projection target, we were down once again at the monthly pivot support, the S1 level, and that's where prices bottomed out. the examples I use will be sort of a building block approach. We have the price analysis here, the pivot level analysis, and then we have this interesting little momentum tool I'll show you that gave some really interesting buy signals at both the late September and the late October low. So in the email, there's a link to sign up. I hope you'll sign up with us. And as I said in the email, you'll also get an invitation to a post-presentation seminar. I'm planning on collecting questions if you have them after my presentation, and we'll try to answer those in the Zoom session just for those who sign up with me. And I think I'll have some more examples of why this methodology can pick out some really interesting opportunities, and will also help you how you determine, if you're an option trader, what strike level to choose and also when to get in and out. As was the case for most of the fall, it's important what type of stocks you're in and what market average. The IWM had a great run from November, but it started to weaken here in the middle of March. You can see the RS dropped below its moving average, indicating it was no longer a market leader, and that trend has continued. So we're not in the IWM at this point. The OBV looks okay, but right now it seems like one of the other averages is going to do better for you in the near term. Well, now that I'm back from vacation, I'll be getting back to you more frequently, and I hope you'll consider signing up for one of our services. We've been fairly active in the past several weeks, even while I was on vacation. If you go to the Viper report, you can see the Viper ETF report sign up or the Viper Hot Stocks. $34.95 I think is a very fair and good price for these services. And if you have any questions, you can also email us at wentworthresearch@gmail.com. And also, if you want a sample copy, we'll be glad to send you one. So thanks. We'll look at the weekly close and get back to you early next week. Hope you have a nice weekend and you're enjoying this move in the markets.